There's one other aspect of this, and we might just play a little bit of a grab here of Douglas Thompson from Coronado Coal, because it just seems to me that notwithstanding a recent blip in gas prices, there's also a real strong narrative that the resources boom that we had seen perhaps 12 months ago has pretty much come to an end. Have a listen to Douglas Thompson from Coronado Coal earlier this week.
India being the bright star after the monsoon season, we're going to see restocking and driving of their steel mills. And that'll give the confidence that pricing will return. But even in these subdued environments where steel production has been impacted and the economies have been impacted, we're still seeing good pricing that's well above the long-term average.
So, Steve Johnson, one aspect that comes off the back of this quite clearly is China. You can see this week there's deflation in China's prices and producer prices, which therefore feeds back into the raw materials. And it's not until really China decides to massively stimulate its economy that you're going to see any turnaround or improvement for some of these resources stocks.
That economy is in a real state, Ross, and I think the problems there are more long-term than one stimulus is going to fix. In fact, I think one of the issues for the Chinese economy is that they keep fixing the problems with more and more stimulus, which builds up more and more problems for the future. At some point, that economy needs to shift from a infrastructure, spend and borrowing-led economy to a consumption economy. And that's what they're trying to navigate here, and that's why you're seeing the overall growth rates for the economy slow down. I think that has 10 or 15 years here to run at least, and we're a very big risk of a Japanese-style multi-decade slowdown out of China. So that's one of the big risks on the world economy side of things. I do think for a lot of commodity markets, though, there's also been very significant underinvestment in new production. And for a lot of Australian investors, if your portfolio is tied up in things that are domestic economy, I don't think there's anything wrong with a bit of exposure there to some commodity stocks that are more dependent on the global economy than they are on our local economy here. That doesn't mean they're going to go gangbusters, but I do think they're exposed to some different risks and some different factors than domestic consumption-exposed businesses, which is where a lot of portfolios have very significant exposure here in Australia.
OK, well, let's bring it back home and a bit more of the domestic side of this, because insurance companies this week showed that they are capable of being able to pass the inflation they're seeing when they've got claims where they have to either rebuild a house, an office, a building, or indeed try and repair a car. We spoke with Steve Johnston, who is the chief executive of Suncorp earlier this week. Here's a little of what he had to say.
Surprised and disappointed, Ross. I think it would be fair to say. I mean, we've spent a fair bit of time with a lot of evidence that we put before the ACCC, and it wasn't beyond the bounds of possibility that this would have to be referred to the tribunal. We went down the merger authorisation path with ANZ with that in mind. We believe that in the absence of the ANZ proposal, if that were not to be able to be executed, then the next best option for us, which is the one we would pursue, would be continuing to own the bank, and we will do so if that's the case.
So, Steve, he's obviously talking there about the ACCC knocking back the proposal that he'd be able to sell Suncorp Bank to the ANZ. But this really goes to the whole narrative about trying to concentrate in that insurance sector to try and have the capital that he needs to basically make certain that any natural disasters and the increasing cost of claims can be well and truly covered by the capital the business has.
Look, I think the ACCC has every chance of losing at the end of the day there. History would suggest that the laws don't quite back up what the ACCC would like to be doing. I think as a customer and a consumer, as a country, though, we should be looking at the laws and saying we have a very, very, very concentrated banking sector here, probably the most concentrated in the world. And if it were me setting sensible policy, I'd be saying none of those big four banks can be buying more market share here in Australia, because it is quite clearly, from my perspective, not going to be good for consumers. And I think you're seeing some of that in the very concentrated insurance space as well, where not only are they passing on prices, but they're making pretty healthy profits at the moment as well. So I think it's a whole space where the government should be looking at what sort of laws they need to pass to give the ACCC a little bit more power here. But I think the insurance sector is managing this inflationary environment quite well from a shareholder and investor perspective. I mean, we've probably all experienced it on a day-to-day basis that those insurance premiums are going through the roof. That is a function of rising costs, and it is a function of their pricing power on the other side of that as well. They're able to pass it through pretty quickly. There's a little smash repairs company called AMA that's on the other end of all of these negotiations. And if you look at its share price, you'll see that they have not been benefiting from this environment because they have these contracts with insurance companies that were set at much lower prices. But it's clear that there is more inflation that needs to flow through that particular part of the market, simply because most people are signing premiums that last at least a year and sometimes 2 and 3 years, where we're yet to see that inflation flow through.
Well, Steve Johnson, we'll try and get you back on during this profit reporting season again to get that analysis, because it is just fascinating. It's a real microcosm of the way in which our overall economy is working. Steve Johnson from Forager Funds Management, many thanks for your time today.